Welcome back to Doc Tickers, where we love to dig into those earnings calls so you don't have to.
That's right.
And today we're diving into Stitch Fix's Q1 2025 report. And I gotta say, things got interesting.
Interesting. Interesting might be an understatement. Stitch Fix, they're the online personal styling service.
Right.
Using algorithms and data to put together, curate wardrobes. They've been doing it since way back in 2011.
Wow. Yeah.
And they had a day on the market.
Now they did. The stock closed at $4.58 on December 10th. But then, get this, surged over 21% after hours
Yeah.
to $5.60.
Whoa.
So that kind of delayed reaction, that's pretty unusual. Yeah. Which makes me think, were there some hidden gems buried in that earnings call that investors maybe picked up on later?
Exactly. The market usually reacts instantly to earnings news, so this lag definitely suggests something caught their attention. Let's unpack what might have sparked that surge.
Okay, so first up, Stitch Fix actually exceeded revenue expectations this quarter, in $318.8 million. Yeah, that's a 5.7% increase year over year, which is a positive sign, considering they've been trying to shift strategies, right?
Right.
To return to overall revenue growth by the end of fiscal year 2026.
Yeah, it's definitely a step in the right direction, especially considering, the challenges they've faced in recent quarters. But we have to look at the bigger picture too, right? Revenue growth is great, but what about the client base?
Yeah, about that. Active clients did decline 19% year over year, down to 2.4 million.
Oh, wow. That sounds pretty drastic, but it's actually the slowest decline they've seen in 2 years. Could this be a sign of stabilization, or are they just delaying the inevitable?
That's the million-dollar question, isn't it? But here's what stood out to me. Stitch Fix emphasized their focus on client quality over quantity this time around.
It's like they're saying, we'd rather have a smaller group of highly engaged, high-spending customers than a massive base of folks who only buy occasionally. And the numbers seem to support that strategy. Revenue per active client actually went up 5% year over year, hitting $531.
Okay, so they're making more money for the clients they do have, and the client decline is slowing. But what about the actual stuff? What are people buying? Any insights into their inventory strategy?
Well, Stitch Fix made a point of highlighting their inventory refresh, injecting a lot more newness into the mix.
Okay.
They said they've increased the amount of fresh inventory by over 40%, and apparently it's resonating with customers. Average order value is up 6% year over year.
They even gave a specific example in the call. Sales of wide leg and bootcut jeans are up 250% from last year. So they're tapping into those evolving fashion trends, trying to give clients that I just got back from a shopping spree feeling,
Yeah, it seems like they're shifting away from the surprise me model and becoming more trend focused. That could be risky, of course, if trends shift quickly. But it also has the potential to attract a more maybe fashion conscious customer base. We'll have to see how this plays out.
Speaking of new things, Stitch Fix has been busy launching its own private label brands, too. The Commons for men and Montgomery Post for women.
Right, and they were pretty eager to highlight their success. The Commons, for example, has quickly become a top 10 brand for men under 40. Apparently, their sweater polos were a big hit this quarter.
Nice. And on the women's side, Montgomery Post is making a splash in the workwear scene with those cowl neck tops. But they haven't abandoned national brands altogether, right?
Not at all. They're still partnering with names like Vori, Marine Layer, and Rhone, and seeing solid results. It seems like they're trying to strike a balance, offering their own brands to control margins, maybe cater to those specific needs, but still leveraging the popularity of those established national brands.
Yeah, it's a smart approach, especially in such a competitive market. They're not putting all their eggs in one basket, so to speak.
Exactly. And speaking of not putting all your eggs in one basket, they're also giving clients more flexibility in how many items they receive in their fix. You can now get up to 8 items instead of the traditional 5.
And get this. Clients who opt for the 8-item fix are requesting almost 40% more items on average, leading to about 50% higher average order values. More choices for the customer, more revenue for Stitch Fix. Sounds like a win-win to me.
Absolutely. It'll be interesting to see if this trend continues and how it impacts their overall profitability, in the long run. Speaking of strategy, Stitch Fix also talked about their marketing approach, shifting toward personalized engagement instead of just blasting out those generic messages.
Yeah, they highlighted their retail therapy campaign, which, it focuses on addressing the common challenges people face when it comes to shopping for clothes. It's not just about selling clothes, it's about positioning themselves as a solution to style woes, almost.
It's a savvy move, especially in today's oversaturated market.
Yeah.
You have to stand out and make a genuine connection with consumers, and this personalized approach seems to be working. Brand awareness is at its highest level in 2 years for their women's business.
So they're getting noticed, they're refining their inventory, and they're making these strategic shifts in their marketing. But let's get down to the nitty-gritty. How does Stitch Fix's financial health look overall?
Well, they're doing better than expected on that front, too. Their adjusted EBITDA was $13.5 million, which translates to a 4.2% margin, and their contribution margin is sitting at about 34%, which suggests they're keeping their costs under control.
So they're not just growing, they're becoming more efficient. And that's great news for potential investors, right? They're not just surviving, they're showing signs of thriving in a tough market.
Exactly. They're making smart moves, adapting to the ever-changing landscape, and focusing on what matters most, their clients. And to top it off, they've actually upgraded their full-year revenue guidance to between $1.14 billion and $1.18 billion, and their adjusted EBITDA guidance to between $25 million and $36 million.
Okay, so they're ambitious, they're making progress, and they're not afraid to put their money where their mouth is. Now, before we get too carried away, it's time for our favorite segment. This is not financial advice.
The disclaimer where we throw out a wild but maybe not so crazy trade idea based on what we've learned.
Remember, this is purely hypothetical and just for fun. Don't base your life savings on our ramblings. But with Stitch Fix's renewed focus on inventory and its positive impact on client spending.
And their strategic play with both private labels and national brands.
What if we consider a long-term call option on Stitch Fix, betting that their turnaround strategy will continue to gain traction and drive their stock price even higher?
It's a bold move, but hey, as they say, fortune favors the bold, right? Remember, do your own research, talk to a financial advisor, and don't come crying to us if it all goes south. We're just here to have fun and explore the possibilities.
Okay, now that we've gotten that out of the way, let's dig a little deeper into some of the specific details from the earnings call that might have contributed to that after-hours surge. There's got to be more to this story, right?
Oh, absolutely. We combed through that transcript and found some really interesting nuggets that shed light on Stitch Fix's strategy and potential. For example, CEO Matt Baer talked about their proprietary AI inventory management tool, which, I mean, come on.
It does sound fancy. What exactly is this tool and why should we care?
Well, it's basically their secret weapon for getting the right clothes in front of the right clients at the right time. It's all about minimizing those misses where you get a box full of stuff you'd never wear and maximizing the chances of a truly personalized on-trend experience.
Ah, so less guesswork, more data-driven styling. That makes sense, especially considering their emphasis on client satisfaction and retention. But is this tool really that revolutionary? I mean, lots of companies are using AI these days.
That's true, but Baer emphasized that this tool is specifically designed for their unique business model, leveraging their vast database of client-style preferences and purchase history. It's not just about algorithms, it's about understanding their customers on a deeper level. And from what they've shared, it seems to be working.
So less random box of clothes, more personal stylist powered by AI. Okay, I'm starting to see why investors might be intrigued. But isn't relying so heavily on algorithms risky? What if fashion trends change quickly or their algorithms fail to adapt to evolving tastes?
That's a valid concern, and it's something they'll need to address. Fashion is notoriously fickle, and tastes can change rapidly. But Baer emphasized that their AI is constantly learning and evolving, incorporating real-time feedback from clients and stylists. They're not just relying on static data, they're building a system that's designed to be dynamic and responsive. Of course, only time will tell if this strategy is truly sustainable.
Fair enough. So we've got the AI angle, but what else got your eye in the transcript? What else might have gotten those investors buzzing after hours?
Well, beyond the tech talk, they also highlighted their operational efficiency. It's not just about growth anymore. It's about sustainable, profitable growth. They're tightening up their processes and really using technology to their advantage.
Right. They talked about maximizing returns on their advertising spend, for example.
Exactly. No one wants to see their marketing budget disappear into a black hole, right?
Yeah.
And they're also seeing success with their new personalized marketing strategy, which ties back to that idea of understanding their customers and delivering tailored messages that resonate.
So it's not just about the algorithms behind the scenes. It's about using data to inform every aspect of their business, from inventory management to marketing campaigns. It's
Yeah.
a holistic approach, wouldn't you say?
Absolutely. They're not just throwing spaghetti at the wall and seeing what sticks. They're using data to make informed decisions and create a more cohesive, efficient, and ultimately profitable business model.
Okay, so they've got the tech, the data, and a renewed focus on operational efficiency. But can Stitch Fix keep this momentum going? Is this truly a turnaround story, or are we getting ahead of ourselves?
That's the big question, isn't it? The good news is they've given themselves a strong foundation to build on. They've got the technology, the data, the client insights, and a renewed focus on operational efficiency.
And let's not forget the power of their brand. They've been around for over a decade and have built a loyal following.
They're a pioneer in the personalized shopping space, and that gives them a certain edge. Plus, they're constantly innovating and experimenting with new ideas, like that 8-item fix option and the personalized marketing strategy. They're not afraid to adapt to the changing consumer landscape, which is crucial in this industry.
Okay, so you're saying they've got the right ingredients for success. But let's be real, there are always risks, right?
Yeah.
What are some of the potential pitfalls they need to navigate?
Well, the competition in the online apparel market is fierce. You've got giants like Amazon and a ton of smaller niche players vying for consumer dollars.
So Stitch Fix has to stay ahead of the curve and keep offering something unique and valuable. They can't afford to get complacent, especially in such a dynamic market.
Absolutely. They also need to keep attracting new clients while retaining their existing ones, which is always a challenge for any subscription-based business.
And they need to manage their costs carefully. That impressive contribution margin needs to be maintained if they want to achieve sustainable profitability.
Right, it's a balancing act.
Hmm.
Attracting and retaining clients, staying ahead of the competition, and managing costs effectively. It'll be interesting to see how they navigate these challenges in the coming quarters.
Well, we'll definitely be keeping an eye on them, and we'll be sure to break down all the key developments right here on Talk Tickers. But for now, let's shift gears and revisit that not financial advice trade idea we teased earlier.
Ah, yes. The long-term call option on Stitch Fix. Remember, this is purely hypothetical and for entertainment purposes only, but let's have some fun with it. So, why a call option?
Well, for those who aren't familiar with options trading, a call option gives you the right, but not the obligation, to buy shares of a stock at a specific price. That's the strike price. By a specific date. That's the expiration date.
So, if the stock price goes up above the strike price before the expiration date, you can exercise your option, buy the shares at that lower strike price, and then immediately sell them at the higher market price for a profit.
Exactly. And in this case, we're talking about a long-term call option, maybe a year or two out, giving Stitch Fix plenty of time to execute their turnaround strategy and hopefully see their stock price soar.
And why do we think it might soar? Well, as we've discussed, their earnings call highlighted a lot of positive developments. The inventory makeover, the success of their private labels, the flexible fix options, the personalized marketing.
It all points to a company that's making smart moves
Yeah.
and potentially on the upswing. If they can maintain this momentum, their stock price could really take off. But remember, call options are inherently risky. If the stock price doesn't go up, you could lose your entire investment.
That's why it's crucial to do your own research, understand the mechanics of options trading, and consider your risk tolerance before making any investment decisions. This is not a game for the faint of heart. But hey, a little hypothetical speculation never hurt anyone, right?
Exactly. It's all part of the fun of following the market and trying to anticipate those big moves. But let's not get too carried away with the financial wizardry. For our final segment, let's indulge in a little bit of pure imagination and brainstorm some out-there ideas for Stitch Fix's future. Who knows, maybe one of these wild pitches will actually come true someday.
I'm game. Let's get those creative juices flowing.
But-
What if, just for kicks, we imagine Stitch Fix partnering with some unexpected brands? I'm talking about a collab that would make people scratch their heads and say, wait, what?
Okay, I'm intrigued. Give me an example. What kind of unexpected brand are we talking about?
Okay, how about Stitch Fix teams up with a high-end grocery store?
A grocery store.
Uh-huh.
You're losing me. Explain yourself.
Hear me out. Imagine getting a fix that includes not just stylish clothes, but also a curated selection of gourmet snacks and artisanal pantry items. It'd be like a lifestyle box, a one-stop shop for looking good and feeling good. It would play into the whole treat yourself mentality.
Okay, I see where you're going with this. It's definitely out there, but I can see the appeal. It would be a way to differentiate themselves from the competition and tap into a broader market.
Exactly. It could be a fun, unexpected way to delight customers and generate buzz. They could partner with a local, high-end grocer in each market to offer a truly personalized experience.
I'm picturing a box arriving at your door with a new outfit, a bottle of fancy olive oil, and some gourmet crackers. It's like a mini escape delivered right to your doorstep. Maybe they could even partner with a meal kit delivery service and throw in a recipe card, suggesting a meal you can make with your new groceries and enjoy in your new outfit.
See, you're getting it. It could be a whole sensory experience. Of course, this is all just speculation and playful brainstorming. But hey, you never know what the future holds for Stitch Fix. They're clearly a company that's willing to think outside the box. So maybe, just maybe, we'll see a Stitch Fix X gourmet grocery collab someday.
Stranger things have happened. But for now, let's bring it back down to earth and wrap up part one of our deep dive into Stitch Fix's Q1 2025 earnings call. Join us next time as we continue to analyze their performance, explore their financials in more detail, and maybe even cook up some more wild trade ideas. Until then, happy investing.
Okay, so we left off talking about all these positive signs for Stitch Fix, but how do these recent developments actually translate into cold, hard cash?
Right, because at the end of the day, that's what investors really care about.
Exactly. So let's dive into those financials. They gave us a pretty detailed look during the call, and there were some key figures that really stood out.
Like their adjusted EBITDA of $13.5 million, which is a 4.2% margin. They also mentioned a contribution margin of about 34%.
That contribution margin is a really important metric. It basically tells you how much money they're making from each sale after accounting for, the direct costs of producing and delivering those items.
So a higher contribution margin means they're keeping more of each dollar they earn, which is obviously a good thing.
Exactly. And a 34% margin is pretty healthy, especially in the competitive apparel industry. It suggests they're managing their costs effectively, which is essential for long-term success.
It allows them to reinvest in growth initiatives, like developing that fancy AI inventory management tool we talked about, while still maintaining profitability.
Right. They're not just burning through cash to chase growth. They're building a sustainable business model, which is what investors want to see.
They also gave us some insight into their cash flow. They generated $9.9 million in free cash flow during Q1.
Free cash flow is essentially the cash that's left over after a company pays for its operating expenses and capital expenditures.
So it's the money they have available to reinvest in the business, pay dividends, or just, keep on hand.
Exactly. And a positive free cash flow is generally a good sign. It means the business is generating more cash than it's spending.
They also ended the quarter with $253 million in cash equivalents, and investments.
And get this, they have zero debt.
Wow, that's impressive, especially in today's economic climate where many companies are saddled with debt.
It gives them a lot of flexibility to pursue their growth strategy without having to worry about interest payments or debt covenants.
They can make bold moves like acquiring a competitor or investing heavily in new technology without jeopardizing their financial stability.
Right. And it's no wonder they're confident enough in their outlook to raise their full-year guidance.
That's right. They now expect revenue to be between $1.14 billion and $1.18 billion, and adjusted EBITDA to be between $25 million and $36 million.
Those are some ambitious targets, but their Q1 performance suggests they might just hit them.
So what does all this mean for investors?
Well, it's certainly a positive sign. Stitch Fix is showing signs of a turnaround.
They're beating expectations, improving their financials, and investing in the future.
But it's important to remember that there are always risks involved with any investment.
No one can predict the future with 100% certainty.
Exactly. But based on the information we have today, Stitch Fix seems to be heading in the right direction.
They're a company worth keeping an eye on for sure.
Absolutely. And that brings us back to our not financial advice segment. Remember we were talking about a long-term call option on Stitch Fix?
Yeah, as a way to potentially capitalize on their turnaround if their stock price continues to rise.
Right. But before we get into the specifics, let's make sure everyone's on the same page about what a call option actually is.
Good point. A call option is basically a contract that gives you the right, but not the obligation, to buy a certain number of shares of a stock.
At a specific price, called the strike price.
by a specific date called the expiration date.
So if the stock price goes up above the strike price before the expiration date,
You can exercise your option, buy the shares at the lower strike price.
and then immediately sell them at the higher market price for a profit.
Exactly. But if the stock price stays below the strike price, your option expires worthless and you lose your initial investment.
Right, so there's definitely risk involved. But with a long-term call option,
You're essentially betting that the stock price will go up over a longer period of time.
and you only have to put down a small amount of money up front compared to buying the shares outright.
So it's a way to potentially magnify your gains.
But also magnify your losses if the stock price doesn't move in your favor.
Exactly. So it's definitely not for everyone.
But for those who are bullish on Stitch Fix's long-term prospects,
A long-term call option could be an interesting way to play the turnaround story.
but again, this is just a hypothetical example and not financial advice.
Always do your own research, talk to a financial advisor, and make sure you understand the risks involved.
Before making any investment decisions.
Okay, now that we've gotten the financial disclaimer out of the way, let's have some fun and explore some more unconventional ideas.
I'm always up for a little brainstorming.
We were talking about Stitch Fix partnering with a high-end grocery store.
Right. Imagine getting a box with a new outfit, some fancy snacks, and maybe even a bottle of wine.
It would be like a curated lifestyle experience tailored to your individual tastes.
They could even partner with a local chef to create a recipe card featuring the ingredients in your box.
Okay, now you're really speaking my language.
Right. It would be a way to elevate the Stitch Fix experience and tap into a new market of consumers.
Who are looking for a more holistic approach to style and wellness.
Exactly. Of course, this is all just speculation.
But it's fun to think about the possibilities.
And who knows, maybe Stitch Fix is already working on something like this.
Well, stay tuned to Talk Tickers. We'll be sure to keep you updated on all the latest developments. But for now, let's wrap up part 2 of our deep dive.
Join us next time as we finish up our analysis and explore some final thoughts on Stitch Fix's future.
Until then, happy investing. Okay, so we've covered a lot of ground with Stitch Fix, from their AI-powered inventory management to their foray into private label brands and even some out-there partnership ideas.
Yeah, we've dug deep into their strategy, their financials, and what makes them, stand out in such a crowded market.
But before we wrap up this deep dive, I think it's worth taking a step back and considering, the bigger picture.
Absolutely. What does Stitch Fix's performance tell us about the broader retail landscape? And what can we learn from their approach?
Right, because they're not operating in a vacuum. They're part of a larger ecosystem that's, constantly evolving.
Exactly. One of the key takeaways for me is the importance of personalization in today's market.
Yeah, consumers are bombarded with choices.
Oh, yeah.
So it's no longer enough to just offer like a wide selection of products.
Right. You have to curate the experience, make it feel, tailored to the individual.
And that's where data comes in.
Right. Stitch Fix is leveraging data not just to personalize the styling process, but also to inform their inventory decisions, their marketing campaigns, and even their financial planning.
So they're using data to create a more efficient, more responsive, and ultimately a more profitable business model.
And that's a lesson that any retailer can learn from.
Absolutely.
Yeah.
It's not just about having data, it's about knowing how to use it effectively.
Right, right.
Another key takeaway is the importance of balancing innovation with operational efficiency.
Yes.
Stitch Fix is constantly experimenting with new ideas, like the 8-item fix option and their personalized marketing strategy.
Right.
But they're also laser focused on managing their costs and ensuring that their growth is sustainable.
Absolutely.
You're not just throwing money at problems. They're thinking strategically about how to, allocate resources.
Right, and that's a critical balance to strike, especially in a, rapidly changing industry like retail.
So what does the future hold for Stitch Fix?
Well, it's tough to say for sure, but they seem to be well positioned for continued success.
Yeah.
They've got a strong brand, a loyal customer base, and a data-driven approach that's setting them apart.
Okay.
Of course, there are always challenges ahead.
Sure.
Competition in the online apparel market is fierce, and consumer preferences are constantly evolving.
Right.
But Stitch Fix has demonstrated a willingness to adapt, and they're not afraid to, take risks.
So we'll be watching closely to see how they navigate the road ahead.
Absolutely. And, we'll be right here on Talk Tickers breaking it all down for you.
That's right. Thanks for joining us on this deep dive into Stitch Fix's Q1 2025 earnings call.
It's been fun.
We hope you found it insightful and engaging. Until next time, happy investing.